What's going on, you guys? My name is Zach Hartley, and in this video we are going to talk about one of the most exciting spaces out there right now, and that is telehealth. We are going to evaluate 3 different companies from not only a fundamental and a technical analysis perspective, but we're also going to look at their business strategy in this video. So I am going to give you everything you need. It will be an in-depth analysis. Here we go. Alright, so let's get right into it. The 3 companies we are looking at today are Teladoc, CloudMD, and Well Health Technologies Corporation. Now, before we get into that, I have to give you the disclaimer. Everything you're about to see is just my opinion. You need to do your own research, and this video was made for entertainment purposes. Now, why are we looking at these companies? Well, there's a couple different reasons that I decided to evaluate these 3 specific companies. Number 1 is healthcare is only going to grow over time. With everything going on in the world, this is a growing market and a growing segment with excellent margins. 2 is that all 3 of these companies use technology as a differentiating factor to improve care and efficiency, and that's what I really like. They also have extremely strong growth from a 1, 2, and 3 year perspective. All 3 of these companies are growing extremely fast. And number 4, they have a focus on contactless or remote communications, and that is the way that the world is moving today. So those are the reasons why we are looking at these 3 specific companies, because I think there is an enormous opportunity in this specific market, in this specific industry, and that is why I am trying to figure out what is the best investment between these 3 major players in telehealth. Now, how are we going to decide which one to invest in? Well, we are going to look at all 3 companies from a fundamental analysis perspective. We're going to look at them from a technical analysis perspective, and we are going to compare their business strategies to see where they align and where they are different, and which one provides us with the best buying opportunity and the best investment opportunity. So let's get right into that. Okay, here are the financials. As you can see, I've basically taken a screenshot of my Excel sheet that I did. We've got the company review at the top here, and on the left, we're gonna start with Well Health Technology Corporation, then CloudMD, and Teladoc here on the right. Now, we do have a couple of different things that we're gonna look at. The first one here is just information based. So this is their ticker, WELL. The current price of Well is $8.41, and their market cap is $1.2 billion. You can see CloudMD is $357 million. And Teladoc is $18.35 billion. So you can see there's quite a range here. We are going from a $357 million company up to an $18 billion company, and we are going to try and evaluate all of them. So the numbers might be a little bit off. You can't always compare companies that vast, but these are the 3 major players in the industry, so we are going to do our best. So when we start looking at revenue, you can see that Well Health Technologies actually has $35 million in revenue compared to CloudMD with 10 and Teladoc with 716 million. So obviously Teladoc is the elephant in the room, is the gigantic, is the industry leader right now. And we've got Well Health Tech and CloudMD, which are both Canadian companies, which have basically sprung up in the last couple of years, are both well funded, and are coming out to compete in that space. Now, unfortunately, none of these companies have any net profit or actual earnings, so we can't use a price to earnings ratio for any of these companies. So what I like to do is use a price to sales ratio. And what that does is it takes the market cap divided by the revenue in the last 12 months, and it gives you a ratio to say, this is how much sales the company is bringing in, and this is how much the company is actually worth, and here's the ratio. And that way you can compare that ratio between the different companies. And so as we go through this process, we can see that they're actually fairly similar. You can see that Well Health Technology Corporation is 31 times sales to market cap. Same thing with CloudMD, it's about 34 times. And Teladoc actually presents the best value from this perspective at 25 times sales to market cap price. And so that's what we are looking at there. And so if you were comparing these 3 companies just based off sales, how much sales are you getting for the stock that you're buying? Well, Teladoc would win this competition. But there is different things that we need to look at here. Now, the next metric that I wanted to bring in here was revenue last quarter. The reason I wanted to bring that in is because I think that the last quarter these companies reported is going to be the quarter that is most heavily impacted by COVID-19. And so because of that, I wanted to see how well they did, and how does that number compare to 25% of their trailing 12 months? Because that's basically what we're looking at. And so as you can see here, Well is well above the 25% ratio of their trailing 12-month revenue. However, CloudMD is only barely above the 25% ratio of their trailing 12 months. So not a great turnout there, and you can see Teladoc is doing extremely well. They're about 1/3 of their trailing 12-month revenue, and so they had an excellent last quarter. And so basically what I'm looking at here in this ratio is who had the best last quarter, and from this perspective it was also Teladoc. Now, when it comes to year-over-year growth, you can see that it tells a very drastically different story compared to the first two factors we looked at, where Teladoc has only had 1.32 times year-over-year growth, meaning that from 2018 to 2019 annual reports, the revenue had only increased by 1.32 times. However, when we look at CloudMD and we look at Well Health Tech, you can see that their revenue increased by over 5.5 times 2018 to 2019 full annual revenue, and that is absolutely amazing, phenomenal growth. You really don't see that very often, and so that is super exciting, and that's why people are so excited about these two companies in particular, is because the growth has just been off the charts. Now, like I mentioned before, none of these companies are making money yet. I put in the annual loss here just so we can put that in perspective. Well is a $1.2 billion company that had an annual loss of $7.8 million. Same thing with CloudMD, they lost $4 million, and Teladoc actually lost $98 million. So these companies are still losing money, however, they're growing exponentially fast, and they have a great market opportunity, especially 5 years down the road. I think there is going to be some mergers and acquisitions in the space. However, it does look pretty promising, and when we look at the gross profit, you can see that Teladoc actually has a phenomenal gross profit ratio compared to CloudMD and compared to Well Health Tech, but the problem is this metric is a little bit tough to compare because of where these people put their cost of goods sold and the salaries that they pay the doctors. Depending on whether you put that in an operating expense or you put it in a cost of goods sold makes a drastic difference, and that's why we see such a discrepancy here in the cost of goods sold and the gross profit. Now, in summary, from a financial perspective, these three companies represent different kinds of opportunities. Well Health Tech and CloudMD are startup companies growing at 5 times, whereas Teladoc is only growing at about 1.3 times growth. Now, that is still excellent growth, especially for a large publicly traded company that's worth $18 billion. That is absolutely fantastic. For these smaller companies like Well Health Tech and CloudMD, they're growing at 5 times. They have very similar price to sales ratios. Neither of them are putting up huge losses, and they both make fairly healthy gross profit margins. So I like both of these companies. I do think these are different plays though between Teladoc and Well Health Tech Corp and CloudMD. I think CloudMD and Well Health Tech are a little bit riskier more likely, and Teladoc is probably going to be a little bit more steady as a larger company. Okay, now let's start getting into the stock charts. So the first company we're going to look at is Well Technologies. So as you can see here, they were trading pretty much horizontal in sort of consolidation here till the end of August. And then as soon as the end of August hit, they had a massive breakout. They broke up to $4.5 and then have ran all the way up to $8.40, essentially doubling their stock price from the summer in just a matter of a couple of months. And so super exciting here, and that's one of the reasons a lot of people are watching this stock right now, is because this run has just been absolutely amazing. Now, we are seeing a little bit of a channel form here. As you can see, I've drawn some trend lines, basically connecting the highest highs and the lowest lows, and it looks like we are trading in a pretty clear channel here. So what I am looking for and what I am expecting here is this stock to continue going upwards as we stay in that channel. If it tests the bottom of it, could be an opportunity to buy the dip. Otherwise, this stock has positive momentum. It is extremely bullish right now, and there isn't a whole lot of bearish signals that you could say, okay, we should expect a trend reversal soon. Okay, the next company we are going to talk about is CloudMD. Now, this company is really interesting. I drew a resistance line here, a price line here, because we had 3 candles that, as you can see, basically tested this 2.4 line, this $2.40 price line. However, this week we had a major breakthrough. So as you can see, Monday was a small green day, nice little gap up on Tuesday, and Wednesday, Thursday, Friday, we rode it all the way up to $2.71 from $2 earlier in the week, and less than 60 cents about 3 months ago. So this stock is on an absolute tear. It has quadrupled in the last kind of 3 or 4 months here, and it is absolutely amazing to see. We also have extremely high volume in the last 4 days here, and in the last week it has gained 25%. So an absolutely amazing run by CloudMD. The question is it too late, or is this just the beginning of a long-term run? Okay, last chart is from Teladoc. Now remember, this is the larger company. This is the $18 billion company, and as you can see, it's It's not quite as drastic as the other companies. We're not quite moving by 3 or 4 times, but we are moving pretty drastically. Back in early 2020 in February, this company was around $60 or $80, and almost a year later, we're probably 8 or 9 months later, it's around $221. So not nearly as drastic, as volatile as the first 2 companies. However, we are seeing some pretty amazing and pretty drastic growth. If you look at the stock chart here, you can see we've got some clear resistance around 250. We've got some pretty clear support here around the 185, and we just got rejected. You can see this green candle bounced and hit 240, came all the way back down to 221, and that is a very clear rejection of the 240 level. And so now we've had 3 negative days since then, 3 red days, and I'm expecting it to basically fall through this support level, probably come back down to 180, 200, and then bounce back above unless we have some positive news in between. Now, this company does have a couple of big things going on, and we're going to touch on that right away. First though, we are going to evaluate the strategy of Well Health. Now this company is different than the other 2. They're a little bit more diversified. They actually operate 20 clinics, and they operate an online doctor portal interface for those clinics. So you can either go into their facilities or you can visit with the doctors online. Either one, either option is totally available through this company. So they are a little bit more diversified than CloudMD. They also have a majority ownership in several different health businesses associated with sleep, associated with skincare, and associated with mental health. So multiple different things going on where they actually own over 51% of the company, and they have a majority stake in it. They're also expanding into the USA primarily through acquisitions, and they are about to purchase a company called Circle Medical out of the United States to basically expand their footprint. Now, one of the X factors in this company is that they have an investor named Mr. Li Ka-shing, and he is actually one of the 50 wealthiest people in the world. He has put a large amount of money into this company, and he has actually helped raise the previous round of funding, and he didn't take any finder's fee or commission on it. He actually just wanted to raise some money to try and acquire more companies in the United States and grow this business as fast as you can. And so as a small little retail investor like me putting my money in, that is something that I really like to see, because it shows that somebody with a lot more money and reputation is willing to back this and put their reputation on the line to make sure that this is a success. And I really like that as a retail investor. All right, next company is CloudMD. Now these guys are different than WellTech because these guys do not want to own any facilities. They do not want to have any brick and mortar. They are completely virtual consultations. And so you can pull up an app on your phone, you can pull it up on your iPad, and you can talk to a doctor and you can show them what's going on. They're also setting up iPad kiosks in pharmacies. So if you know that you're going to need a prescription after you go see your doctor, you can actually go to the pharmacy, go to an iPad, talk to the doctor, and then turn around and go to the pharmacy and get your prescription and go home. So really nice business model there. I really like what they're doing, and I really like that it is a 100% pure play on virtual consultations and virtual meetings with your doctor. It's a little bit more streamlined and a little bit more focused with lower overhead. Thirdly, they're actively acquiring new services. They just acquired a company out of the United States that provides a mental health application. I believe, and please correct me if I'm wrong, but the mental health app is designed to help indicate what mental health symptoms you may have by completing a series of tests, questions, and surveys. Pretty cool technology. This company is planning to grow across North America, and they have already serviced over 3 million patients. So it's not like this is a new technology or they're trying to prove out the concept. They have already connected over 3 million patients to doctors, which is a really amazing number and something I'm pretty impressed by. Now the last company here is Teladoc. This is the larger company, the $18 billion company, and like I said, they have a couple of things going on. The number one thing that you need to know about is that they are about to merge with Livongo. Now Livongo is another company based out of the United States that focuses on smart hardware for the healthcare industry, and Teladoc is about to merge with them. So now they have the virtual interface to connect you with your doctor, and they have the smart products that you can use to get better that will also send the information back to you and to your doctor. So it's a little bit of an ecosystem that they're trying to build, and they're definitely the major player in the game right now. The financials are scheduled to come out pretty soon here. They're scheduled to come out on October 28th actually, so about 12 days away from when I'm making this video. They're the largest telehealth company by far. They're valued at $18 billion, and they're actively acquiring new services and new companies. They're growing fairly quick at 1.3 times year over year, so that is nice to see. It's not like they're slowing down by any means, and I do think they have a great opportunity here. They're basically trying to take over general healthcare. So if you needed to go to see a doctor to get them to look at a rash, you needed some pills to help you out to get on a plane, you needed whatever it was, something easy, something small, and something general, these guys want to be the go-to source for that, for connecting you to your doctor and the next step of the process as well. And they've been able to execute on that pretty well so far. Now, before I give you my strategy for how I'm going to personally trade these three stocks, I just want to talk about a couple of resources that I use and that I've created for my stock analysis. If you guys are interested, I do share all of my spreadsheets with my Discord chat room. It's where I post all of my technical analysis and fundamental analysis on a daily basis, and I answer any questions or comment on any topics that people are bringing up in my chat room. It is basically a community of traders, and I post all of my daily technical and fundamental analysis in there. So if you guys are interested in joining or you want to sign up and be a part of the community, it's $5 per month. Check out my website. It is linked below, and I would love to have you there. All right, now let's go over my strategy. So for Well Technologies, I'm going to buy it this week, and I'm going to set a stop loss at $6.90 so that I know if I am wrong and it falls through that support level, I am going to get out of this stock very quick. I also am going to play the same way with CloudMD, and I'm going to buy into it this week, and I'm going to set my stop loss at $2.20. So if we fall below support, I'll know that my assumption is wrong. The tides have changed, the trend has changed, and I need to get out of that stock. And for Teladoc, I am going to buy the break of $255. So the previous high was $253. What I am going to do is buy the breakout. As soon as it gets to $254, $255, I'm going to buy the breakout on the upside. Now, in summary, real quick, you guys need to know that these companies are only going to grow, but there is going to be volatility over time, especially if you decide to invest in CloudMD or in Well Technologies. They are much, much smaller companies that are going to see a lot of volatility. Secondly, these valuations are extremely difficult. There's no earnings to base this off. There's no fundamentals to really look at and say this company's worth this much based on cash flow. It's really difficult, and the technology is going to become more dominant in healthcare over time. Lastly, I think the best way to play this would be to buy and hold all three over the long term. So if you guys got any value out of this, please consider subscribing. My only goal here is to share my analysis and help you make more money. So if you get any value out of that, hit the like button, hit the subscribe button, and I will see you guys in the next video. Thank you so much. Peace.